Oaktree has been a manager in performing credit, both on a liquid and illiquid basis, since the 1990s. We manage funds and accounts in high-yield bonds, senior loans, structured credit, emerging markets, and convertibles, as well as multi-asset credit. On the illiquid side, we do several different types of private credit, including sponsored and non-sponsored private loans, direct loans, on a first lien and mezzanine basis. And we also have dedicated funds under management that focus on non-sponsored direct lending as well. And then separately, we have an opportunistic credit business that is also quite active in private loans or direct loans that are a little bit more complicated and storied in nature, and usually very active when the markets are most dislocated. In terms of investment, Europe is a very attractive opportunity set. It is smaller than the US market is for us, but we find that Europe is still attractive because the companies tend to be a little bit less levered. There are sectors in Europe that are that help from a diversity standpoint, both from a geographic perspective and an industry perspective, that makes sense to add to a global mandate. So we are quite constructive on Europe. We like the European markets. We do compare it on a relative value basis against the US as well as other regions. And we are very active in Europe. We have a direct lending business in Europe. We also have opportunistic credit situations that we are considering in Europe as well. In terms of fundraising, Europe is an active area for us. We have a dedicated fundraising team based in London as well as throughout Europe. We have an office in Paris as well. And specifically in France, we are seeing a lot of activity from both institutional investors and family offices, looking at a variety of different types of investments at Oaktree, including private credit. And then throughout the rest of Europe as well, we're quite active in fundraising with institutions such as insurance companies and other pension plans. The private credit markets are offering some of the best risk-adjusted returns we've seen in many, many years. I think all of the private credit managers, to the extent they don't have legacy portfolio issues that are a distraction, are enjoying the opportunity to lend on a first lien basis with a double-digit yield. That hasn't been the case for many, many years. And the loan-to-values are meaningfully lower today than they were even 2 years ago. Typical loan-to-values on large sponsor-led transactions are about 40%. And the typical return is 11 or 12% in terms of yield. And then finally, I think the other attractive point is, we have gone through a period of volatility now with the pandemic and with inflation. And some businesses were tested, albeit for a short period, but were tested. And therefore, that offers the opportunity for credit investors generally and private equity investors to underwrite, assuming a challenging environment in the near future. So we are stress testing. We are all stress testing the possible companies that we're investing in our portfolio and lending to them on very conservative terms with very attractive returns.